Ladies and gentlemen, what if I told you that the biggest wealth building opportunity of this decade is hiding in plain sight, and yet almost everyone is too blind to see it? While the world obsesses over stocks, bonds, and cryptocurrencies, there's a quiet revolution taking place in silver, an opportunity that can multiply your wealth by 100 times, and most people will miss it entirely. Today, I'm going to show you why this isn't speculation. It's inevitable, and why those who act now stand in to gain enormously. Most investors today are walking around blind. They think they are making smart choices, that they are building wealth, that they are preparing for the future, but in reality, they are standing on the edge of a cliff, oblivious to the danger beneath them. The world is obsessed with paper assets, stocks, bonds, ETFs, and cryptocurrencies. Everyone is chasing the next hot investment, the next story in the financial media, the next headline that promises a quick gain. They believe that these assets represent real wealth, that owning a few shares or a digital token somehow makes them financially secure, but they couldn't be more mistaken. What they are really doing is participating in the greatest illusion of value ever created, an illusion that's been fed by decades of central bank intervention, money printing, and artificial manipulation of markets. The truth is that most people have completely sight of what real wealth is. Real wealth is tangible, it is scarce, it is something that cannot be created out of thin air or inflated away by government policy. And yet the masses are fixated on financial instruments that exist only on a screen, numbers that can be adjusted with the stroke of a pen, and digital tokens that have no intrinsic value whatsoever. They're blinded by convenience, distracted by complexity, and deceived by authority. They have been trained to believe that these assets are safe and that the market always knows best. But when the next crisis hits, these illusions will vanish and the damage will be catastrophic for those who fail to see it coming. What makes this blind spot even more dangerous is that it is largely invisible. Most investors don't even know what they're missing. They are focused on short-term performance, quarterly earnings, and stock charts, oblivious to the underlying realities of the economy, currency, and wealth preservation. They ignore the erosion of purchasing power, the unseen inflation that eats away at savings, and the fragility of a system propped up by artificial support. And while they are busy chasing ephemeral gains, a quiet shift is occurring in the real world. Tangible assets, assets that have intrinsic value, are quietly positioning themselves for an explosion that most people won't recognize until it's too late. Silver is the perfect example of this blind spot. For decades, it has been overlooked, dismissed, and undervalued. Investors look at gold and see a safe haven, and silver is just a secondary player, a minor asset with little relevance. They fail to recognize that silver is not only a precious metal, but also an industrial commodity with real-world applications that are growing every year. They fail to recognize that global supply is constrained, that mining output is declining, and that physical stockpiles are being absorbed faster than they can be replaced. They fail to recognize that the combination of scarcity and rising demand creates a perfect storm for exponential price appreciation. While the world is busy chasing paper, silver quietly accumulates value, waiting for the inevitable moment when recognition finally arrives. This blind spot is not limited to silver, it extends across the entire financial landscape. Investors are conditioned to trust institutions, to follow the herd, and to assume that the next market cycle will resemble the last. They look at interest rates, stock indices, and corporate earnings thinking that these numbers tell the full story. They fail to factor in the long-term consequences of currency debasement, systemic risk, and economic mismanagement. They fail to see that the game they are playing is rigged in favor of those who control the money supply and against those who rely solely on conventional metrics. They fail to see that by ignoring real assets, by ignoring tangible wealth, they are leaving themselves exposed to the next wave of financial upheaval. What's even more troubling is that this blind spot is self-reinforcing. The more people focus on paper assets, the less attention they pay to the fundamentals, the more they chase short-term gains, the less prepared they are for long-term preservation, and the more they rely on artificial signals, stock prices, indices, and economic data, they become disconnected from reality itself. This is why so many investors are caught off guard during crises, why so many lose fortunes when confidence collapses, and why so few recognize opportunities that exist right in front of them. The solution is not complicated, but it is uncomfortable. It requires stepping back, looking beyond the illusions, and asking hard questions about what truly holds value. It requires understanding scarcity, utility, and intrinsic worth. It requires recognizing that not all assets are created equal and that the masses are often blind to the most significant opportunities because they don't conform to conventional wisdom. The real opportunity lies in what people ignore, undervalue, or dismiss. It lies in the blind spot, in the area where fear, neglect, and misunderstanding have created a massive imbalance between price and value. Those who can see through the noise, who recognize where real wealth is accumulating, have the chance to achieve gains that the herd cannot even imagine. Ultimately, the blind spot in the market is a reflection of human nature. People are drawn to the familiar, distracted by the immediate, and reluctant to question authority. But financial history is filled with examples where ignoring the fundamentals led to disaster, and where those who saw the truth early reaped extraordinary rewards. The next decade will be no different. The blind will continue to stumble, but those who are awake, alert, and willing to act will find opportunities that most people cannot even comprehend. The lesson is clear. Stop following the herd, stop chasing illusions, and start looking where others refuse to look. That is where the future lies, waiting to be claimed by those with the vision to see it. Silver is one of the most misunderstood and undervalued assets in the world today. For decades, it's been dismissed as the junior partner to gold, a secondary precious metal that most investors overlook. But this dismissal is a grave mistake. Unlike paper currencies that can be printed endlessly or digital assets with no intrinsic value, silver possesses qualities that make it uniquely powerful as both a store of wealth and a hedge against economic instability. Its structural advantages are clear, yet few recognize them, which is why it remains one of the most compelling opportunities in the financial market. First and foremost, silver is real. It exists in the physical world. It is scarce, and it cannot be manufactured out of thin air. Every ounce mined represents tangible wealth, and every ounce held as a physical asset is proof of real purchasing power. In an era when governments continue to debase their currencies, printing money without restraint, holding an asset that cannot be inflated away is a strategic necessity. Unlike stocks, which can become worthless when a company fails, or bonds, which can be devalued by inflation or default, silver retains intrinsic value. Its worth is recognized globally across cultures and generations, and it has been a form of money and store of value for thousands of years. Silver also has a dual function that sets it apart from other precious metals. It is both a monetary asset and industrial commodity. Industrial demand for silver continues to grow year after year, driven by technology, electronics, solar panels, medical equipment, and countless other applications. As the world becomes more technologically advanced, the need for silver only increases. A persistent underlying demand that is immune to financial speculation alone. This is fundamentally different from gold, which is primarily a monetary asset. Silver's combination of scarcity, monetary significance, and industrial utility gives it a structural advantage that few other assets can match. Supply dynamics further enhance the structural edge. Global silver production has been relatively stagnant, and new discoveries of high-grade silver deposits are rare. Mining is expensive, resource-intensive, and subject to geopolitical and regulatory risk. At the same time, much of the silver that has been extracted historically is tied up in industrial uses or jewelry, leaving only a small portion available as liquid investment-grade metal. The result is a market that is inherently tight, where demand often outpaces available supply. When scarcity intersects with rising demand, prices are forced to adjust. And this is precisely what creates the potential for significant gains in the years ahead. Another critical factor is the asymmetry between perception and reality. Many investors look at silver and see only volatility, ignoring the long-term structural trends that favor the metal. They see its price swings as a risk, not realizing that these swings are temporary distortions in a market fundamentally driven by real scarcity and industrial necessity. While the masses are focused on short-term movements, the structural forces, limited supply, growing industrial demand, and global recognition as a store of value are quietly aligning in silver's favor. It is a rare situation where patience and understanding of fundamentals can yield extraordinary rewards. Moreover, silver offers a level of leverage against currency debasement that few other assets provide. When fiat currencies lose value due to inflation or reckless monetary policy, tangible assets like silver increase in relative purchasing power. Unlike stocks, which can be influenced by company performance and investor sentiment, or bonds, which pay fixed amounts that can be eroded by inflation, silver's value is preserved because it represents real wealth that cannot be created artificially. In a world where central banks continue to expand balance sheets and manipulate markets, silver's structural advantage becomes even more pronounced. This advantage is also amplified by the fact that silver is still largely ignored by the mainstream investing public. While gold receives attention from the media, investors, and financial advisors, silver remains under the radar. This creates a situation where the fundamentals are strong, but market recognition lags, setting the stage for a future price surge once the broader public begins to understand its value. When the recognition comes, the upside potential is massive, precisely because the market has underestimated its structural advantages for so long. Finally, silver is portable, divisible, and universally accepted. Unlike real estate, which is cumbersome, illiquid, and local, silver can be stored, transported, and used anywhere in the world. It is a global asset, a form of wealth that transcends borders, politics, and economic cycles. Its combination of liquidity, scarcity, utility, and historical recognition create unique structural profile that few assets can rival. In short, silver is not simply a commodity, nor is it a speculative play. It is a structural powerhouse with qualities that protect wealth, provide leverage against inflation, and offer enormous upside potential. Those who recognize these structural advantages now, before the broader market wakes up, have the opportunity to position themselves in an asset that is both safe and poised for extraordinary growth. Ignoring silver's structural edge is a mistake that could prove extremely costly, because while the masses remain blind, the fundamentals are quietly building a foundation for one of the greatest wealth opportunities of the decade. The world's financial system is teetering on the edge of a crisis few truly understand. Most people are asleep at the wheel, believing that the markets, the government, and the central banks have everything under control. They glance at interest rate, stock indices, and inflation numbers, thinking that these figures tell the full story. But the reality is far more unsettling. In short, macroeconomic forces are converging in ways that are going to shake the foundation of wealth for anyone who is not prepared. We are not dealing with a minor correction or a routine recession. We are witnessing structural imbalances in the global economy that have been building for decades, fueled by excessive debt, reckless monetary policy, and widespread mismanagement. At the heart of the problem is money itself. Fiat currencies, the lifeblood of the modern economy, are losing their value at a pace few recognize. Governments and central banks around the world have been printing money with the abandon convincing citizens that their purchasing power will be preserved. But history and common sense tell a different story. The more you print, the less each unit is worth. Inflation is not some abstract concept. It is a silent thief that erodes savings, diminishes the value of contracts, and redistributes wealth from those who work and save to those who control the printing press. For those who hold only paper assets denominated in these debased currencies, this is a looming disaster. Debt is another ticking time bomb. Global debt has reached levels that are historically unsustainable. Sovereign nations borrowed to fund deficits they cannot afford, while corporations pile on leverage in search of growth that is already overstimulated by easy money. Consumers continue to borrow against future income, lured by artificially low interest rates and a sense of economic security that is entirely illusory. This debt is not benign, it is a systemic vulnerability. When confidence falters or interest rates rise even modestly, the entire house of cards could collapse, triggering defaults, bankruptcies, and a cascade of financial failure that would ripple through every market. Meanwhile, global economic growth is slowing even as central banks pretend that expansion is sustainable. Stimulus programs have become permanent fixtures rather than temporary measures, masking underlying weaknesses instead of correcting them. Productivity gains are sluggish, real wages are stagnant, and the cost of living continues to rise. Policymakers respond with more spending, more debt, and more intervention, creating the illusion of stability while making the eventual reckoning even more severe. In this environment, traditional assets such as stocks and bonds are exposed to sharp corrections, and those who rely solely on paper wealth are walking a very thin line. Geopolitical tensions add another layer of risk to the macroeconomic picture. Trade wars, sanctions, and political instability have the potential to disrupt supply chains, increase the cost of essential goods, and exacerbate inflationary pressures. Energy markets, already volatile, could see sudden shocks that ripple across the global economy. When combined with currency instability and debt accumulation, these factors create a perfect storm for financial turbulence. Most investors remain blind to these risks because they are focused on short-term market performance, failing to connect the dots between economic policy, geopolitical tension, and long-term wealth preservation. Amid these forces, tangible assets like precious metals stand out. They're not subject to the whims of government, central banks, or the volatility of paper markets. Silver in particular is positioned uniquely to benefit from these macroeconomic pressures. Its scarcity, industrial utility, and historical role as a store of value create a hedge against both inflation and systemic failure. While paper currencies lose purchasing power, tangible assets retain it. While stocks and bonds can be wiped out by default, silver represents wealth that exists outside the fragile constructs of debt and leverage. The macroeconomic forces that threaten paper wealth are the very same forces that can propel silver to extraordinary heights. Investors need to understand the asymmetry between risk and opportunity. Those who fail to recognize the implications of inflation, debt, and monetary policy are exposing themselves to catastrophic loss. Those who position themselves in real assets, however, are not just protecting their wealth, they are gaining leverage against an unstable system. The market tends to underestimate the speed and magnitude of these shifts because conventional analysis focuses on superficial metrics rather than structural realities. When the realization finally sets in, it will be sudden and dramatic, leaving those who ignored the warning signs scrambling while those who prepared are rewarded. The key point is that these macroeconomic forces are not temporary or isolated. They are systemic currency debasement, unsustainable debt, slowing productivity, geopolitical risk, and central bank intervention are all interconnected. Each one amplifies the others. The result is a fragile system propped up by illusion and maintained by short-term thinking. The opportunity lies in understanding this interconnectedness and acting accordingly. While the majority of investors remain entranced by stock tickers and interest rate headlines, the real story is unfolding beneath the surface where tangible asset scarcity and intrinsic value are quietly accumulating strength. Ultimately, macroeconomic forces do not wait for recognition. They unfold according to the laws of economics, not investor sentiment. Those who ignore them do so at their peril. Those who understand them can turn the same pressures that imperil the masses into unprecedented opportunity. The system is imbalanced, paper wealth is exposed, and tangible assets are positioned to thrive. This is not speculation. It is the predictable outcome of decades of mismanagement and structural distortion. To act now is to recognize reality before it forces itself upon everyone else, and to claim a position of strength while the rest of the world remains blind. Most people cannot even imagine the scale of what's coming. They see silver trading at prices that seem reasonable, they glance at the charts, they look at past cycles, and they tell themselves it's just a commodity like any other. They fail to recognize that silver is positioned for a rare and extraordinary opportunity, a chance to multiply wealth many times over, potentially by 100-fold. This is not hyperbole. It is the logical outcome of decades of neglect, underappreciation, and structural dynamics that the market has yet to fully acknowledge. Those who understand the forces at work now and who position themselves accordingly stand on the threshold of one of the most asymmetric opportunities in financial history. To understand the potential, we must first grasp the disconnect between perception and reality. Silver is consistently underestimated by the masses. It is seen as secondary to gold, an afterthought, a cheap alternative for those who cannot afford the real precious metal. Yet, the fundamentals tell a different story. Silver is scarce, it is industrially essential, and it has a long-standing role as money and store of value. Its price is artificially suppressed in part due to manipulation and in part due to lack of awareness. This creates a situation where the underlying asset is worth far more than what the market currently assigns to it. When the recognition of that value finally arrives, the price reaction will